I have with me Seth Freeman, Senior Managing Director of GlassRatner Advisory and Capital Group. Welcome, Seth. My first question to you is, you have seen what happened in the US. What is your pick in among the emerging markets per se?
Well, this rally and almost hitting a new high today is very positive because it looks like risk is back on.
Freeman, good morning. This is Ankita also joining in. In fact, that was my question. You really think that the risk-on sentiment is back on the table? Because one thing is very clear, that the fact that the repercussions that would ensue perhaps from the tariffs, the Trump tariffs, that have been put to rest because the investors seem to be throwing caution to the wind, whereas Fed is really maintaining that stance that they will be watching out for what could be the possible outcome of that, and therefore they are halting the rate cuts for now. But the investors, the risk sentiment is back on the table.
Well, I'm not saying that risk on is rational, but it looks like that is the behavior that we're seeing. It might reflect just a sense of relief. We heard from Lutnick today that they signed the deal with China, that 10 top countries are about to sign deals, and maybe it partly reflects this sort of ebullience. I believe the government is pushing hard to also try to influence the Fed.
All right, we have also seen statements which is coming regarding the Federal Reserve decision. Now the result is out, but there has been expectations that there will be 2 cuts this year. What is your assessment and how will it impact market?
Well, I still believe that the Fed's position is that it's just too early to assess the impacts of tariffs because there is a lag effect. And we are seeing, reading about quite a number of layoffs from major corporations here in the United States. So there's also just concern about the reliability of the data that's available to the Fed right now. So I don't think there's going to be a rush to have a rate adjustment.
Mr. Freeman, let's talk about the dollar index. Dollar index has hit its 3-year low. In fact, it's been trading sub 100 levels. Do you really think dollar has lost its dominance? And going ahead also, how do you see that shaping up?
This might reflect concerns about the so-called big, beautiful bill and what's going to end up being passed, and the level of deficit and debt increase embedded in the bill. So that's probably what we're seeing here. I know the Treasury had a big auction recently, and it's hard to get bidders. So the dollar is weak.
So, Mr. Freeman, now that you mentioned the big beautiful bill and the fact that it will increase the trade deficit, it will increase the fiscal deficit. Talk to us about the fact that despite the looming fear of that happening, really is caution being thrown to the wind too early, too soon?
I think it's going to be a long summer in terms of looking at all of these different metrics and data points in order to get a good read. Again, there's been a lot of business planning, and at the same time, business deferrals relate in terms of purchases, imports, and so forth, and supply chain issues related to the tariffs. And we're going to have to see that work its way out until we have more clarity.
All right, Mr. Freeman, thank you so much for joining at this hour and putting into perspective the global updates. But with this, it's time to take a quick break, and don't go away. We'll follow up with more news and updates.